That part. So this doesn't count as socializing. Damn, squad event is not socializing. This is socializing.
That's fine. I'm telling you. I mean, first of all, the first said I'm not a relevant guy. Her sister didn't go to me. Now they're not saying squad is not a dead stuff. We are dead guys. It's okay. It's okay. Enjoy.
No,
Your
no, no.
just break.
When I told her that I was doing like a work call interview type of thing, she was like, "Oh, like what is this?" And I said, "Oh, it's Edosa." And I was like, "Oh, I've seen the content. Why do you tell? Ah, now my people now. What are you talking about?" So
That's good. That's good. That's good. Okay. You know what? Now you're winning some points back. Keep winning the
Okay,
points.
yeah.
Hello, everyone, and happy Sunday, first of all, and welcome to another episode of Squad Academy. Today, we have another special guest in our midst. Like I said, there's not another 2 day guys on the call. This year is going. This year is going pretty
This
good.
year is going well. Yeah, we're trying to not bore you guys with our voice and bring all the experts we know.
Exactly. So today we'll be having a fun conversation. I'm actually really looking forward to this. Okay, but we're having a fun conversation with Oke, someone that Edosa has actually known for a while. So Edosa, thanks for hooking us up with this one, man. Thanks for hooking us up. But I'm not going to do the intro because apparently I suck at that. I struggle with English. It's not my first language, so I'll let Oke do this. Handing over to you, Oke. Do you want to just quickly introduce yourself to the listeners and tell us about what you do and how you got here?
right. So my name is Oke Ekpaga. Well, actually, it's Ehirim now, but I still have my.
Congrats, by the way.
Congrats.
Thank you. It's still a bit I'm adjusting. Yeah, so I work as a senior analyst at a VC firm called We Capital. It's it's an early stage fund that's based in Lagos. We invest an average of out of our fund two, we invest an average of 400K in fintech, SaaS, digital commerce, and health tech companies. At the same time, we're active investors. This is always a question, right? It's like, are you guys actively investing or are you just like scoping it out? We're active investors. We've done 3 deals so far out of our fund 2.
Okay.
And of course, we're always looking for people building great stuff. So this is me pitching us, please. If you are building a startup, you're looking for money, you want to work with people that want to build you, then please reach out.
Okay.
Yeah, I think that's good as an intro.
No,
Yep.
thank you. I don't want to do this, but just out of the formality of this podcast, Edos Alpha. Let me just introduce my guy. Edos Alpha.
As you know, greet me. I'll be furniture.
Let's not be like
All right, guys, I'm doing good. Happy New Year, happy New Month. It's February.
It is February. God, it's February. Okay. All right. Okay. All right. But yeah, just jumping right into it. Okay, you mentioned that you work at We Capital. I think you said your average ticket size was 400K. Just so the audience don't get it mixed up. That 400K is Naira, or is it dollars?
Dollars, man. These people are ballers.
$dollars.
$40.
But we don't talk Naira in this conversation. We don't.
We do not.
That's good. So, okay, so your early stage. So by early stage, do you mean pre-seed, seed stage cap? I mean, what level are you?
Right. So that's actually a very interesting topic to talk about. Because we've recently, like out of our current fund, we've recently moved towards investing in seed stage companies. With our fund 1, we invested more in pre-seed, and then a few like seed stage companies, right? But I think like even across like the ecosystem, there has just been less investments in companies that maybe pre-idea, pre-revenue, let's see a bit of traction. Let's know if like there's a bit of like product market fit. Maybe not the fit, but just let's know that you're already in it, right? And then this can make sense.
Okay.
And then growth numbers, maybe in terms of revenue or in terms of users, what does that look like, right? We're not doing pre like that. And it's also great because it allows for a bit more due diligence. Because you're not just running on vibes, you're actually doing a bit of thinking, not the same as you would for a growth stage company.
Yep.
But yeah, it's a welcome development.
Okay, that's interesting. And we'll go into that soon, like the diligence part. But something caught my attention in the beginning. You're saying, "Hey, this is my page, guys. If you're a startup, please come to us and apply." And I can relate to that, right? Because I mean, when I used to do small investing, I won't say VC, it wasn't 400K, maybe 400K naira. But back then, I used to have a conversation with my friend saying, "Look, I'm looking for startups to invest in," and they were telling me, just go choose, advising me, and I was like, "Look, I don't just want to tweet who needs money, because that would be a floodgate of randoms that are not qualified. But at the same time, I need, like, my email is zero. Nobody's like coming in. So how do you match that between getting like 2,000 emails that are not useful or getting zero? So how's that like? Would you say how's that search been like for finding quality deals in Nigeria? Would you say there's no deal? In your opinion, forget like formality of this conversation. Would you say, look, I don't think there are good deals in this country compared to the money that is chasing them? And Dapper and I always have that argument about, is there more money chasing startups in Nigeria or more startups chasing money? What are your thoughts?
Right. So first of all, the conversation we're having about PR and comms was pretty like related to this, right? Because sorry. You would notice that a lot of the VC firms are doing a lot of marketing, right? And that's because you need the deal flow, you need the startups to reach out to you and say, oh, hey, we're raising or building something cool. Would you be interested in partnering with us? And it's interesting, right? Because you need to build it in such a way that you're top of mind for any serious entrepreneur or any serious founder, right? It's a very interesting conversation because apart from the PR and comms, like being active on LinkedIn, being active like in events, doing all of that front-facing work, there's also the work of building relationships with journalists, building relationships with product people. I mean, like doing stuff like this, building relationships with founders. Like, so you're just top of mind for any, especially because it's early stage, any new developments that is worth like getting on, right? And then also, especially because if you can get in early and you can prove your value, you can get the round at a discount. If it's good enough, then when other people find out about it, then that's their own problem. So yeah, in terms of looking for deals, that is, I guess, like one part of it. Now, in terms of the quality of deals, it's crazy because a lot of the inbound deals that we get, and also a number of VCs get, I think it's like a worldwide thing, right? And not actually deals that we would want to go ahead with, right? I don't have like the how do I say, stage by stage percentage, but like of all the, I think we got, according to our CRM, we got about 500 deals in 2023, 1,300 in 2022, right? Anyway, we've had about like 3,000 deals go through our CRM. A number of deals were probably not recorded in the CRM, but we've only invested in 2% of those companies that apply to us or that we apply to, that is, right? And it's like such a stringent like process, and most of them are not from deals that came through our CRM. They're probably deals that we sourced ourselves, deals that came in through outside, exactly, right? We've had a few that we've gotten through that, but it's just not the best way to find the quality deals. Now, this year, last year have just been tough in terms of finding quality deals, right? even when you think you found one, by the time you go to IC, they find reasons why it is not one, right?
Yeah.
Like currently, I'm working on 3 deals that I think are the best thing in the world. I'm also like, if I meet IC at the end of this month, what am I going to hear? Like, is this going to be a good story or a bad story, right? Like, I think it's a very dicey thing because a lot of companies are unable to make the revenues, the users that they need. Inflation is high. Devaluation is occurring on a daily, hourly basis. Like business operations are just being like wiped out on a day-to-day. Raising LP funds is harder because interest rates, all of that. It's just a much like tighter space that I don't think it's that the quality of deals have dropped. I think it's that we're no longer so flush with cash that we can afford to be careless, right?
Yeah.
Like there's so much more thought.
The requirements have gone up. Yeah.
Exactly.
Expectation. Yeah.
Exactly. Which isn't necessarily a bad thing. It's just a
It's
market
needed.
correction.
Yeah.
Yeah.
Market
Okay,
correction.
so I think there's something I want to double click on, right? So you mentioned that that at some point you walk through some deals. I guess your acceptance percentage now is a lot lower compared to what it was maybe in 2020 or 2021 when cash was a lot freer. But you mentioned that you're at a stage where you review your deals like the 3 you're reviewing right now. When you get to IC, and for those who don't IC, I mean, IC just stands for investment committee. But when you get to IC, they could just say no, we don't want this, right? So what are some of those like? And you don't have to say everything because I know you guys might have your own internal things I don't want to disclose. But like what are some of the things that you really notice, right, when it comes to the I and that could make your IC say no to this deal, right? What like some of those hot things that maybe like some of these founders should just keep in mind. Like, just some
I mean,
nuggets.
I think it's pretty much the same thing that'll make me say no, just that maybe I won't notice it, which is
Okay.
why it's good to have like new eyes on your deal.
Yeah.
Yeah, ICs scare me, but at the same time, it's like if we don't
It's
have
needed
this, we can have
for
the right checks
governance.
and balances,
Yeah.
right? But yeah, basic things, traction, what are the actual numbers, right? So for instance, in SaaS, you would see that the gross margins would be 80 to 90%. That's, I think, proper standard, right? If I didn't know that, I would maybe see a deal where they're doing like maybe 40, 50, 60%, and I'll think it's great. But it's like because they have like a bit more experience and they also just have like, maybe a bit more, I'll say like a different like look at it. It gives context that makes me realize, okay, this isn't doing as well as it should, right? And it's like, okay, you as the founder, why are your direct costs so high? Like what's going on, right?
Salaries.
That's like even in
Salaries.
terms of sorry.
Founder salaries.
And let's not even get into the effects. What are we talking about? Like, God. I mean, this one is public, right? Payday is one of those examples where it's like, why? Like, what was going on?
You took the name very serious. Payday. It's like
Come on.
I
So
can imagine
yeah,
a small segue. I can imagine like that conversation with how Payday scaled through many VCs that approved him, and I can imagine them not smiling through the IC committee like and asking questions. Yes, we want to impact lives, my life, my family's life.
no. I can't even imagine. Anyway, so let's not even go into that.
That's a good sound. Yeah.
Yeah.
So yeah, I think like for any founder that's looking at their business, it's really a question whether you have a finance background or not. It's understanding what at the very least your P&L is saying, right? What your accountant is preparing for you, what your cohort analysis is saying, how fast are you growing compared to companies within like your industry? What does that actually look like? Are you like how well are you growing, right? So I think I said traction. Nothing
Traction,
else is in mind right now.
gross margins, and okay. No, that's good. That's good. Thanks for providing that context. Because we've also had some form of IC in the past as well, and we have our own process as well for going through that, right? So I was just more curious what you guys see on your end.
I think I have more context on what you're asking.
Okay.
So our process is more, I'll say, like flexible, because before it gets to IC, you would have like the founders would have met like most of the members of the IC and the team, right? So it's like in terms of team or vibe check. Sorry, I'm a Gen Z, I've been told.
Then
We would have done that like during the due diligence process, right? So, and like if there's anything that needs to be dealt with, that would have been done already. By the time I'm the senior analyst, I'm the only analyst on the team, investment analyst on the team. So by the time I'm done with the IM, I pretty much do like a mini presentation. It's nothing fancy. You're not designing it too much or anything. Just go through the team, the financials, market size, risk mitigants. What else? I think that's most of the information, financials, I think. And then, based on that, you do your presentation to the IC. If there was a certain amount that you recommended to invest, all of those things can basically just change. Think about the structure of the deal ahead of getting the term sheet to them. That's if it goes through. If it doesn't, well, that's what that is. You and the founder that you've grown close to, you cry together, you keep it moving till next time. You can make recommendations to others, even better. So yeah.
Keep it moving. So that's an interesting, because you talk about the structure. How do you guys think of exits, especially since you guys are early stage slash seed stage? How do you calibrate that? Are you thinking we're probably going to exit in, like, what's your average? So are you going into a deal thinking we're going to exit maybe in Series A through secondaries, or we're staying for the long haul, or 10 years, or we exit as an IPO?
I mean, I don't see lots of IPOs happening. So we can't base our entire model on a unicorn,
Yeah.
unfortunately. We, in terms of Series A, I mean, that's always the hope that they'll get to Series A, Series B. If the valuation allows, then we can. That's basically secondaries, right? That's
Yeah.
pretty much the strategy that we employ. I mean, it might be sale of all shares, it might be sale of like part of shares. It doesn't have to be, it depends on what is useful at that time. But I think that's every African VC, honestly, like early stage VC, angel, early stage, like it's, what else are you going to do? What are the other options? Yeah, some would argue that that's the, like, because like so many funds return based on secondaries, that it means that the VC model is not for Africa, right? Because you should ideally exit through an IPO. And I mean, I
Or
get
a
that.
sale or something. Yeah.
This is what it is. Yeah.
That's interesting. Yeah, that's interesting for Africa. Does that seem gloomy to you that there are not that many exits, and do you think that would change anytime soon, or you think if it works, let's keep?
Sorry?
So does that seem gloomy to you that there aren't that many like exits, meaning IPO slash M&A, or do you think the sector will keep going at this kind of level?
I honestly don't know.
Yeah.
I think there are lots of things that we need as I was like maybe as a continent or as a country, right? That just do not exist, especially for a space like tech, right? I mean, we've had Jumia IPO, it didn't go well. Flutterwave has had many whispers about IPO, it hasn't happened. and that is Flutter Wave. Like, I
Yeah.
mean, like, there was Paystack acquisition by Stripe, and that was great. But yeah, it's a very, I think maybe if there's like a conversation to be had, it will be a question of how young our industry is compared to like other industries, and like compared to like how young VC is in like Nigeria, Africa, versus like how it is like maybe in the US, and the length of time compared to the IPOs. I think that's like a way to think of. I don't have the numbers, so I really can't say, but I think that would be an interesting thing to look at. Yeah.
Yeah. And I think, this might be more, maybe in the short term, it might sound really aspirational as opposed to just realistic. But I think the sooner we can fix our public markets, the better for us. Because when you look at, if you want to look at capitalism in America has been here for decades now, so you can't really focus on that. But if you want to look at the Chinese Revolution as well, like, although these nations, right, really dependent on the public markets, right? So it's not as if the Chinese government depended on strictly just outside or VC capital from the US to really grow the economy, right? It was kind of like within the nation as well. So I think it might sound aspirational, but I think the sooner we can really fix our public markets, the better for us, because we can't keep in the long term, we can't keep relying on going public in the US or the New York Stock Exchange as our main exit. Why did this ask money like this? We can't keep we can't keep relying on the US Stock Exchange, so the New York Stock Exchange. But that's just my 2 cents on it. Because like you already said, right, the whole Florida wave thing has been it's been in the works for like 2 years now, if I recall, like since 2021 or early 2022. I know they've been doing some road shows here and then trying to really build some momentum on that, but we don't necessarily know where that's going to happen. I think it has to happen this year. That was one of my predictions. This time I spoke about this. I feel like it's going to happen this year. Just looking at the runway, looking at how much they raised. Last time they raised was 2021. So I think at some point they got to go public, right? But I think we can't keep relying on the US Stock Exchange as the main exit, man. At some point but then again, that's me going back and relying on governments to really fix some of these things. So at some point the private market has to push forward, right? But I don't know, like I don't know. We need to fix our public markets. That's all I can say. I don't know.
Infrastructural problems.
Infrastructural problems. Yeah.
What it is.
But sorry, I digressed there. I was going to ask a question. Just going back to the conversation. Something I've always worried. Something that, and I think we just need to clear up for a lot of listeners, right? Because the one thing I always see, whether it's TechCrunch or Tech Cabal or TechPoint, they'll drop news. This one raised $10 million. This one raised $20 million, right? And all of a sudden, to be fair, the general public just feel like, they have that money. So a year down the line, when they now shut down, they're like, this startup after raising $20 million a year ago, they've closed shop, right? But most people don't actually know that when startups raise capital, they just don't get that money like that, right? There's certain things in place. It could be based off milestones, whatever it is. But like, can you shed some light on that process? Like, when a company raises capital, how does that go about? What's like the disbursement schedule like? Like, you just
capital calls, if
capital
that's
calls, yeah.
tuned into the agreements. What does that look like for like a novice founder? What should they understand?
Interesting. So I actually don't know.
And that's fine, and that's fair.
That's fine.
So let me actually give, I guess, like a bit of context on that. When we invest in companies, we actually just give them
Give the full
the
amount.
money.
Yeah.
ASAP.
Yeah.
Okay,
Yeah.
early stage.
Yeah.
Some do that actually. Maybe LPs do that to VCs when maybe it's capital calls.
Yes, there is
like
that for LPs to VCs. So like this I was like this context, the way you prefaced it, like it's just I don't know any VCs that do conditions precedents for
Yeah.
early stage companies. I'll be sure to ask it lots more questions now because I haven't.
And to speak to that, that if they do it, that is almost unfair practice. You get so it's two legs of the situation. If they do that, means the VC is taking advantage of the startup. But I've heard some situations of even grants where they've done media policies that this startup won this grant, XYZ. I thought wasn't getting their lot yet. But the grant
Yeah.
people have done their whole PR or whatever. So that's very unfair. But then two, in some cases, you also have startups where they are commingling all the fine clauses to increase the number of the slated amount that they raised. So meaning that let's say a company raises 10M or whatever, and they could potentially raise another 5M in venture debt. They just take it to the price that they've raised 15M. You get so that happens as well in some cases.
Oh yeah. There's that. Should there was something I wanted to add. It was not coming to mind. I've forgotten it, sorry. But yeah, some
she was like, I can't relate. My firm is ethical.
Oh, so yeah, so that's actually what I was saying. Like they're actual like firms that don't have money in the bank, like VC firms that don't have money in the bank, and then they'll just start stalling. They would start
It's
like
very
they're
painful.
like
Yeah,
horror stories. So like when you're saying the thing about conditions precedents in my head, I'm like,
the
is
red
this just
flag.
another story that they're like using to and that really like strangles a lot of startups because you're waiting for the money and it just like never comes, right?
Yeah.
Yeah, about the I think second point that Edosa made, it's also a thing where I mean you might not the company might not maybe they raise in 2022, they might not announce till 2024, and it's possible they could have done angel, pre-seed, and seed, and then they will now announce everything. You
That happens too. Yeah.
like you're like, oh, this company raised, I don't know, 5 million, but like what's the actual like you don't know what the details are, you don't know when it came through, all of those different things.
Okay.
And then also like a company can be raising like maybe 10M and eventually only gets like 2M in cash, right? But the timing of getting that 2M might be 500 in 2020, another 500 in like end of 2020. Like it's just, I think that's
Yes,
the way
so I think I think
That's
that's
what you're probably referring to.
that's pretty much what I mean. The point I was trying to make, right?
fair enough, fair enough.
Yeah. So maybe not necessarily conditional, or I mean maybe that maybe
Branches or whatever. Yeah.
more like in tranches, right? Now, of course, I mean I don't know of any VC firms that are giving conditional. I don't know. I just know I've read a few reports about it. Like I mean, some VCs that do that. Now I don't know if it's ethical or not. But I know that the VC that actually just disperse those funds in tranches, so they can say like Q1 this year you get this, Q4 you get this kind of stuff, right?
Oh yeah, that I think I can see how that would be a thing. I don't know any specific deal where that has been done. And I'll definitely ask a lot more questions about this. But I can see how that'll be a thing, especially if a founder is not meeting your, I was
The
like
goal,
expected
target.
traction,
Yeah.
like
Yeah.
ASAP, right? But I think it's also an interesting thing, and I'm just thinking through it. You don't have to put this out, please.
No.
But like, I'm just thinking through it, and I'm like, if you believe in a founder and you believe in what they're doing, especially because it's very early stage, it can feel like a thing of distrust to break it,
Break it. Yeah.
right? If you said they need 500K to do product development, hire this one, are you not going to form accountants when really you're just supposed to be maybe a board member? That's if you're a VC fund that gets like board seats, right? It's like, show the belief. It's a gentleman's agreement or a lady's agreement, if you will. Do it. Like let's keep it moving. Especially because early stage. It's not growth stage that you're doing 5M, 10M checks. And I'm sorry, who's doing 10M checks?
No, I mean,
That was doing 10M checks actually.
funny guy.
The one man VC.
Funny guy.
My sponsor.
And this are not spreading fake news on this podcast. So God, please help me. God, please.
But so real quickly, I think as a segue to that, you've helped us contextualize deal flow and now even IC/investment process. Could you shed some light on the operational side? So let's say a company actually makes it through
Yep.
all this, you guys invest. What does month 3, month 4, what does like the day-to-day interaction look like? You kind of hinted on board seats. Can you just give us an idea of what's after everybody says I do, what does it look like afterwards?
Was it happily ever after?
Yes.
We're very different from a lot of funds because we actually provide support. Like, it is not odd for a founder to reach out while they're fundraising or while they're thinking of fundraising for us to do pitch deck for them, for us to do comps. Maybe we won't build a model, but it's not odd for us to figure out their data room, right? For like their next raise. It's our money that's inside, so we need to say grow, right? I'm not sure what this looks like in like other firms. But for instance, venture platforms has they have a dedicated platform support team, right? So that team is quite, will I say, fluid and interconnected to the investment team. So either someone on the investment team or someone on the platform support team could find a deal, push it to the investment team who do due diligence, IM, everything. The platform guys can also sit on the IC, just see what that what that whole process looks like. And then when they're done, they can send the founder like an onboarding email, like, oh, this is, how we tend to, I don't know, bring guys on board. This is the support that we provide. If you need this, reach out. If you need that, reach out. And then I know in general, founders tend to send quarterly reports. If it's a company that we think needs more hand-holding, maybe like monthly reports, right? If you happen to be close to the founder, visit their office or have dinner with them or WhatsApp them. There's a lot of that, like, I guess, like informal, like checking in that happens when you're closer to a founder. It's just, I guess, like relationship. But by and large, you would get your quarterly reports, right? How much you can sit on a founder's neck, right, also depends on how much your rights are in the company, right? Like, do you have like board seats rights, for example? Is this a time when you should step in? Because it's also a very like dicey thing. So portfolio support is more of an art than a science, right? Because you don't want to be like, you're not supposed to be in.
Overbearing. Yeah.
Exactly, right. Is your money is there, true, but at the end of the day, this is someone's work. Like, if you've got a good founder, then there has to be that level of trust in what they're building. You're just there to support them. It's portfolio support. Yeah.
What's your outlook on the VC sector, the VC industry? If someone were to tell you what do you see the industry looking like 10 years from now, what would your response be?
So we had quite a lot of elections. People shook, right? Like a lot of changes all around. And then even still just coming off of COVID, tests like springing up in different outside in different countries, right? And then also devaluation is affecting a lot of inflation in the US is having ripple effects around the world, right? And then we now have the devaluation, we have like rising inflation across like many African countries. So there is, I guess, like less spending power for a lot of the end users, so to speak. But at the same time, a lot of reports that I have seen have mentioned, okay, yes, we're going to have, in Nigeria, for instance, we're going to have 30% inflation by January, which I think is where we are now. But within the next couple of years, all of the policies that are being put in place to create investor, yes, is going to eventually pay off, right? It's tight now, but it's going to eventually pay off, right? And then at the same time, thank God, because of globalization, a lot more services can be exported, right? So even if we don't have the numbers, which is quite unfortunate, I wish there was a data company that was taking in all of this data. But shout out Tech Cabal,
Yeah.
data and media work. You have a huge rise in the amount of dollars that's coming into the country, into the continent, I think, because we're able to export services, right? We have Bosun Tijani as Minister of Information, and it's amazing to see the work that he's doing, and fingers crossed that it pays off, right? And we start to see people that are not even like in school or able to go to school build
yeah.
And I think the story that I love the most, right? Real life, these brothers, they didn't go to uni, right? They grew up really, really like, poor. Like they had like one laptop that they used rubber band on, and they would work like close to, like these betting shops, right? Those boys are just around, like maybe on a bench somewhere, just so they could plug in the laptop and learn how to code, right? They eventually got into the Facebook hub, and like no, so Facebook at the time had an accelerator for companies. So you come with your idea, and then they would help you like shape it up, and eventually, you can go on to build. And somehow the company that they had, it was some deep AI, no, it was some ML AI type of company, right? It got acquired by Microsoft, and they started working with Microsoft, and that's how they jackpot. Like it's one of those, and now they're doing extremely good. Like these guys are eating good, right? But it's one of those things where you don't necessarily, I mean, you think about the numbers, you're like, oh, this person is earning in dollars, yes, but like we also have very high unemployment rates, right? But what does it look like when you're creating all of this, like different channels, social media, programming, all of those that enable the skills to grow? And what does that even look like for the startups that are able to raise in USD and employ all of people that have like all of these necessary skills, right? I think there is more of a movement. I mean, yes, we have all the manufacturing, importation, all of those problems, but there's more of a movement towards the service industry, especially because you can build on like the growing globalization, that I think is going to be what saves us in the end. So yes, I'm happy to be in the industry that's going to save the world, or save Africa at the very least.
Crazy, man. I feel like dropping like 50M of Dapo's money just by hearing that. That's really more PR is your talent.
Thank you.
Yeah.
Just about that. That was I almost forgot we just talked about. I was like, did she just tell us something? That was mad.
That was good. That was good because I think it's refreshing.
I kind of believe that. So yeah,
it's yeah. I mean, of course. I mean, Edisa knows me. Sometimes I tend to be an extreme optimist to my own detriment sometimes. So it's refreshing. It's refreshing to actually hear that from someone that's in that space, who can still see the light at the end of the tunnel, right? And of course, like you said, you have to look at the data as well, right? I mean, globalization is it's a real thing, right? I mean, looking at where things are shaping, you have to look at the data. I mean, looking at the growth we're seeing within the continent, the average age, seeing how labor is now shifting to certain continents, China trying to stay away from just strictly labor, trying to focus more on tech. So like at the end of the day, like the future looks bright, looks very bright for the African continent, and we're here for it, right? We're here for it. I mean, funny enough, like a lot of people like you and people that you work with will not look like extreme geniuses in the next decade or two when a lot of these things start coming to fruition, and people go back to this podcast and see when Oke was saying these things, right? So, but we're here. We're here for it. We're here for it. We're here for it. But no, thank you very much for giving us at least an hour of your time. This was a great conversation. This was probably the most technical
Sunday morning service.
This is probably the most technical conversation we've had
the
regarding
gospel of VC, like
VC.
proper,
Yeah,
proper,
yeah,
proper. I really
yeah.
appreciate it. Like when I reached out to you, I didn't even expect that. I was like, maybe just banter for old time's sake. But like, I actually appreciate this. Yeah, like, this was good. This was very good.
Thank
This
you,
is
thank you. You're validating my inner child. Thank you.
Thank you so much for your time. I know it's a Sunday. It's probably around 4, 5 p.m. over there.
Yeah.
But thank you so much for giving us your time today. This was a great conversation, and I'm sure the listeners will like it too. It's a very in-depth conversation about what it takes to be operate as a VC firm. And what you guys look out for as well when it comes to investing in startups. So thank you so much for sharing that information with us. Any final thoughts, Edo sir? Okay, any final thoughts?
Yeah, I just want to say thank you. You gave us proper knowledge today, and good catching up again. And I'm optimistic about the VC space because of you.
I'm
All right.
glad I'm having a lovely chat. I'm happy I showed up. I'm happy you guys invited me for this. It's a great honor. Thank you.
Absolutely, absolutely. And we'll definitely keep in touch. We'll definitely keep in touch. I know
If you do,
we've
sorry.
already had conversations about certain things that we have going on. So definitely keep in touch and try to keep the conversation going,
Okay.
But yeah, so that brings us to the end of today's podcast. Guys, you know what to do. Like this, share this, let us know your thoughts. Let us know if there's anything that you like okay, to shed more light on. I'm more than happy to bring that back. Okay, so don't be shy, guys. Let us know. Just keep sending the feedback. But yeah, once again, thank you, okay. It's been great. I wish you a good rest of your day and a blessed week. Be safe and have fun. Thank you.